Welcome to today's Explainer, where we're going to dive into a truly fascinating financial mystery. We're looking at how a tiny 136-person company managed to quietly position itself as a multi-million-dollar choke point for the entire AI hardware industry.
All right, let's jump right in with a number that should instantly grab your attention, 40%. That represents the absolutely massive single-day stock swing this relatively unknown company, AHR Test Systems, just experienced. And get this, it happened on absolutely no public news, just a few weeks prior to their recent earnings print. We're talking about a stock that went from the high 60s, pushed toward $100 in after-hours trading, and was honestly behaving almost like a meme coin. But I assure you, the underlying reason for this is entirely real.
So to solve this mystery together, we're going to break this explainer down into 5 quick parts. 1. The AI Tollbooth. 2. Curing infant mortality. 3. The billion-dollar bottleneck. 4. Unpacking the moat. And finally, Part 5. The fallback and risks.
Let's kick things off with Part 1, the AI Tollbooth. We've got to start by looking at the sheer financial explosion that put this company on the map. AISIH recently posted a fiscal 2027 revenue guide of up to $150 million. Now, to put that into perspective for you, they had a fiscal 2026 base of just $50 million. That guidance implies up to a 200% year-over-year growth, absolutely obliterating Wall Street's consensus, which was sitting at around $85 million. They also posted a fourth-quarter booking surge of over $60 million. Look, these aren't just incremental, steady-state gains. This is a company forecasting a total transformation of its revenue base, which is incredibly rare to witness in real time.
Which brings us to Part 2, curing infant mortality.
You're probably wondering, what on earth justifies these mind-bending financial projections? Well, it all comes down to an obscure manufacturing process that literally nobody thinks about until it fails. The core problem is called infant mortality. Yes, that is the actual semiconductor industry term for it. It refers to chips that pass every single functional test on the factory floor, but then just die anyway during their first few weeks of real-world stress. And as AI silicon gets more and more complex and expensive, the cost of a chip failing early has gone from being an acceptable yield loss to a catastrophic expense. AHR basically provides the last line of defense against this happening. The really crucial point here is exactly when you catch this failure. The traditional method the industry uses is package-level burn-in. That means they stress test the parts after they're already cut, bonded, and sealed into their final housing. But Air's entire business model is built around doing this one step earlier, wafer-level burn-in. Using their proprietary tech called WaferPak, they test everything simultaneously before the wafer is even diced into individual chips. To really put this into perspective, think about baking. Finding a bad chip after it's permanently bonded into a multi-$1,000 AI GPU package is exactly like finding out you used a rotten egg only after your $40,000 wedding cake is fully decorated and delivered. You don't just lose the egg, right? You have to scrap the entire, wildly expensive assembly. Catching it at the wafer stage saves the whole cake. But engineering this? It is absolutely brutal. Air's Fox XP platform delivers an enormous 3,500 watts of power to a single wafer. That means they are safely testing over 5,000 individual die at extreme temperatures simultaneously without degrading a single microscopic connection for hours at a time. It requires the test equipment to literally outmuscle the incredibly power-dense chips it's testing. It's an insane engineering feat.
Let's move to Part 3, the billion-dollar bottleneck.
Every single time you hear about Microsoft, Meta, or Google spending billions on new AI data centers, remember that this tiny company is quietly taxing those dollars. HRT sits directly inside the fastest-growing niches of the semiconductor test market. The wafer-level test and burn-in market is forecasted to essentially double to $4.5 billion by the early 2030s. Or look at co-packaged optics, which is riding a massive wave right now as data centers shift to optical connections. HRT is directly leveraging this hyperscaler CapEx boom, where hundreds of billions of dollars are eventually turned into silicon wafers that absolutely must be screened before deployment. And their opportunity is expanding rapidly. Air is actively pushing into new memory standards like high bandwidth flash and high bandwidth memory, or HBM. This adjacent HBM market is massive and currently dominated by giants like SK Hynix, who control roughly 62% of the space. Air has actually completed benchmarks with a global leader in NAND flash, and they're in discussions to align their test specs with massive new capacity coming online. The bottleneck they've created is almost absolute at this point. We're talking about nearly every major category of AI-era silicon, from processors to optical transceivers, requiring a burn-in step that most of the industries still simply cannot do at the wafer level. In fact, 3 separate customers each represented more than 10% of Air's recent quarterly revenue across AI processors and optical transceivers. So how are they pulling this off? Part 4. Unpacking the moat.
How does a 136-person company defend this highly lucrative toll booth against massive, well-funded industry titans? If we analyze their defense using Hamilton-Helmer's 7 Powers framework and compare them to massive incumbents like Advantest or Teradyne, or even low-cost challengers in China, it becomes super clear that Air's moat is not built on scale. I mean, they're tiny. Instead, their power comes from immense switching costs. Once a chip design is qualified on Air's WaferPak, switching takes months and risks massive yield disruption. Plus, they hold a cornered resource in their highly patented full wafer contactor IP.
Furthermore, those giants like Advantest and Teradyne, they're totally counter-positioned. They generate incredible free cash flow from their traditional automated test equipment. They're structurally disincentivized to destroy their own highly profitable current package-level testing business just to chase Air's specific wafer-level niche. Air, meanwhile, is laser-focused entirely on just this one thing. However, we really have to look at the reality of this advantage. While the moat is real, it relies incredibly heavily on the fact that the giants simply haven't fully entered the race yet. HSR isn't necessarily winning a crowded race. They're running a race that nobody else has chosen to fully compete in directly. And that is a materially different and, frankly, much more fragile kind of advantage. Which leads us to our final section, Part 5, the fallback and risks. As objective analysts, we must stress test this thesis, because in the semiconductor world, there are absolutely no guaranteed home runs. If you just look at their recent history, you see a company that is highly prone to boom and bust cycles. Just a couple of years ago, they rode a massive wave during the electric vehicle and silicon carbide build-out. Revenue surged up to $65 million in 2023, and then slid all the way back down to $50 million as EV demand cooled off. Their business is inherently lumpy, heavily dependent on a small number of massive qualification wins. Let's rapidly fire through some of the other massive risks currently on the table for them. First, you've got a stretched valuation. Wall Street price targets are sitting meaningfully below where the stock was trading during this massive surge. Second, there's a really dangerous reliance on just 3 big customers. Third, tens of millions of dollars in heavy insider selling happened during the rally. Fourth, you've got unpredictable geopolitical exposure, which includes active patent litigation with a Chinese rival and heavy reliance on manufacturing in Taiwan. And finally, the long-term threat of BIST, built-in self-test technology, where chips might eventually embed self-test circuitry directly onto the die, which would remove the need for Air's external hardware entirely.
So I'm going to leave you with this final thought for today's explainer. As hundreds of billions of dollars continue to pour into AI infrastructure, can this obscure 136-person company truly maintain its monopoly over the ultimate hardware bottleneck? Or is it only a matter of time before the massive incumbents or the technology itself simply builds a bypass around them? It is a genuinely fascinating choke point to watch, and it's exactly